Hello and welcome to another update video about the DXY. Yeah, the DXY is still following the idea that a larger corrective structure is unfolding here, possibly targeting the low $90 region in the coming months. So that's been my perspective for, well, a long time now. I remember when we tracked the top here and then A wave down, a super boring B wave, sideways B wave, flat structure, an expanded flat, basically A wave down in 5 waves. Then we have the flat structure here in a B wave, and now we might have started this C wave down already in October. And since then I've been leaning towards a top being in. So far the parameters that I defined did hold, so the resistance areas in any of these rallies to the upside did hold, and also the invalidation points that we define based on the wave principle, well, they haven't been broken. So the pathway to the downside is still, let's say, clear, and there are no obstacles at the moment in the way. So I don't have any reason to change my perspective here about an unfolding move to the downside. I can count a 5-wave move to the downside since the October 2023 high. And as already mentioned in the last few videos, we expected a wave 2 rally. That is likely unfolding. Few things to mention about that. So first of all, this move down is part of a larger 5-wave move to the downside in wave C. That could be a wave 4, after which we see a wave 5 rally, or it is a larger A wave low. So either way, at somewhere down there, as soon as these 5 waves are complete, we should see a larger bounce. And that could be a B wave rally, which could be, well, it can be aggressive. It can always be a boring sideways corrective chop, or it will be a wave 5. But either way, it should be a larger low in place here. But first of all, we go still further to the downside, as it seems. At the moment, what we can see is that likely this wave 2 of wave C is still unfolding. There's important support down here around, yeah, $99.60. So let's zoom in. Let's go to the 1 hour chart, the near-term perspective. Here, the idea is that possibly wave A topped. That was on the 5th of January. And yeah, we might be indeed in this, in this B wave to the downside I provided in the last video. I mean, it could technically be that this wave 2 is already over. But to confirm that, I need to see a break below $101.17. At the moment, yeah, it could be that this ABC is still unfolding and is forming a larger wave 2. This would be very weak for a wave 2. So I prefer a larger, more substantial wave 2. Let's see if we can actually draw a trend line here that might be relevant as well. So that's broken actually. Okay, so that indicates that a larger wave 2 is indeed unfolding. But if we look at the micro, I mean, best I can tell really is that, let me zoom in a bit. So that obviously this B wave is unfolding. I would like to change the wave degree and then we can add another layer. Okay, so my idea would be A wave, possibly B, and now wave C of B unfolding. There's no absolute need for it. That's just an idea on the smaller time frame. Remember that these smaller time frame movements are obviously oftentimes more fragile. But we could say that as long as this last top stays in place at 102.66, a C wave to the downside is unfolding a little lower into the B wave support. From there, then we should see a more extended C wave rally. Okay, that doesn't need to be substantial, but could go a little further into the resistance area. And we've got individual Fibonacci resistance levels at $103.96. $104.75 and $105.89. That's the larger resistance area. As long as this isn't broken to the upside, and as long as we only have a 3-wave rally here in place, there's no reason to change my opinion. Also, as soon as we have the B wave low in place, I'm going to add a target for wave C. I mean, this is the standard resistance area for a wave 2, but there will be additional targets. Now, what I can imagine is that there's going to be good support between the 50% Fib level and the 61.8, so between $104 and $104.50 roughly. because this is an ideal area for a wave 2, and we have previous structural resistance in this area quite a bit, so there should be good support there. So that's what I'm watching for. So first of all, this B wave of wave 2 might still be unfolding, but you know, we don't need to touch the support area. I could also easily add here the 38.2 retracement level. It's just sort of to indicate, okay, these are the levels to watch where we can get a bounce in this B wave, and then from there another move up and then down. That would be ideal. Yeah. Whereas the trend is down at the moment, so I wouldn't be surprised about a more direct breakdown, but it would be a very weak wave 2 then. So that's my update about the DXY. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in daily updates about the S&P 500, as well as regular updates about stocks, then check out our S&P 500 and stock service. You'll find the link in the description. Thanks a lot for watching. Bye-bye.